Welcome to the Tax Problem Solver. You can call anytime, 24 hours a day at 877-257-1040. Someone is there to take your call. You could email me, ckm@taxproblemsolve.com. Go on the website, www.taxproblemsolve.com, for a lot more information, see testimonials. We have about 25 or 30 special reports on our website that you can register to get and download them anytime you want. Our newsletters on the website, our prior radio shows are on the website, so there's a lot of things you can get off of our website. All right, so let's talk about audits. What happens when you get that letter from the IRS saying that your tax return is going to be audited? Well, the first thing you probably do is panic, because it may have never happened to you before. You don't want it to ever happen to you, but now that it has, and you don't know what to do. So probably the worst thing you can do is ignore that audit. The second worst thing you can do is to try to handle the audit yourself. You've never had an audit. You may never have one in the future. We've handled hundreds of audits for clients and people that were not our clients. Probably more than hundreds. It's probably over, into the thousands, in my 40 years. So what happens is you need to contact the preparer that did your return. Hopefully you used a paid preparer, and ask him or her if they have the capability and the qualifications to represent you in an audit. We get referrals from CPAs all the time for audit referrals, because they simply don't do audits, and we do handle them for their client, and then the taxpayer, the client, is still their client. We don't try to poach or steal their clients. We once represented a CPA in the audit of his tax return twice. First time he did his own, and he was not a tax accountant, he was an auditor. So you can't say, oh, CPA should have been able to handle his own. Not all CPAs are tax people. In fact, probably the vast majority of them are not tax people. So he came to us, we did the audit. He started it on his own, got it completely fouled up, and we did the best we could, and got him to pay less than what they originally were trying to get from him with handling it. And then he said, okay, thank you. And he continued to do his own tax return. And about 3 or 4 years later, he calls us up. He was being audited again. This time he was smart enough to call us as soon as he got the letter. And we handled the audit right away and got a much better result than he did the first time. He was kind of sloppy in his record keeping, didn't remember to report all of his income, things like that. And after that, he started having us prepare his tax return. And we prepared his return for probably 7 or 8 years, and then he retired and went on Social Security and a pension, and that was it. And he felt as though he could do his own tax return, and I probably haven't heard from him in 8 or 9 years, and I'm hoping he's doing well. So that's what you need to do with an audit. Now, there are 3 types of audits. There's a correspondence audit, an office audit, and a field audit. Now, correspondence audit is when the IRS sends you a letter and is asking for specific information. There's no need to meet with anybody. Now, you may have received a notice called a CP 2000 notice. That is a notice that the IRS sends usually a year to a year and a half after you file your tax return, or after that tax return is due. So right now, those notices have been going out since probably May for the 2017 tax year. We're probably getting to the end of the cycle on them, but there's still a few that are going to still come through. And that's when the IRS is going to tell you that you did not report all the income reported to them by a third party. And that could be a W-2, you forgot that you worked for a place, or you didn't get one because the company went out of business and you thought, oh, I don't have to report that income. They didn't send me a W-2, they're out of business. Well, somebody sent that W-2 in. Or a 1099 for some self-employed income, dividends, interest, anything like that. Sale of stock is a big one. I had people that bring these notices to me Some of them are existing clients, current clients, and they didn't tell me that they sold stock or a mutual fund because they sold it at a loss. So, I bought it for $50,000, I sold it for $40,000, I lost $10,000. Yeah, I lost $10,000. But what happens is the IRS is sending them a letter telling them they did not report $50,000 on the sale of that stock, and they want the tax on the $50,000. They don't know on the $40,000. They don't know that that stock costs that taxpayer $50,000 and they have a $10,000 loss. So, even if you have losses, you still need to report that sale for two reasons. One, so the IRS doesn't send you that notice looking for the tax on $40,000. Plus, if you lost money on the sale of stocks, you can deduct up to $3,000 of loss each year against your other income and carry the rest of that loss over in the future years until it's used up. So in many of these cases where these people lost money and didn't report the sale, I'm able to actually get them a refund. When the IRS was looking for tax on $40,000, I'm able to file that schedule that needs to be done and get them a refund based on a $3,000 loss. It's not a big amount. It may only be a few $100s, but hey, it beats having to pay the tax on $40,000. And it helps alleviate my fee for handling the problem for them. So that's part of a correspondence audit. The other correspondence audit is you deducted $18,000 in contributions and we need to see documentation. Or you deducted mortgage interest expense. It wasn't reported to the IRS by the bank. Maybe it's a private lender. We need to see the documentation. I had one of these correspondence audits a few years ago myself, probably 6-7 years ago. And I started gathering all the information for every item on my Schedule A, itemized deductions. And then when I wrote the letter to answer them back, I saw that all they wanted was proof of my contributions. They didn't care about my taxes, my real estate taxes, taxes withheld from my paycheck, mortgage interest, nothing. And that's shame on me because I didn't read the letter in full. I saw Schedule A. I just started documenting everything. Well, I sent them a letter just with the contribution support. And I got a letter back from them, a few weeks, few months, whatever it is, with a no change. We had a correspondence audit earlier this year. Client, they wanted to document his unreimbursed business expenses. Well, he was a sole proprietor. They wanted to documentation for the expenses on his Schedule C, which is the schedule he reports his income and expenses on. And I'm kind of surprised that was a correspondence audit and not an office audit. And we sent all the documentation in, and then we got a letter disallowing every deduction. And they said, didn't provide this information, didn't provide that information. I sent it all back again and said, can we get somebody to look at this? Because it's obvious nobody looked at this before. And we heard back a couple of months later, they hit him for a few $100s for a couple things he couldn't document. So that's a correspondence audit. Everything's handled through the mail. An office audit is when you go to their office, the IRS. They usually allot half a day for the audit. You go there, they're going to ask for documentation for specific things on your tax return, and you bring that documentation. And they'll make copies of things unless you're bringing them copies. Never let them keep original records, and they do not want to keep original records. They'll make copies if you haven't brought them. And if you say, oh, you can just keep those bank statements, they'll say, no, I don't want to be responsible if they're lost. So that's an office audit, and typically there you're not meeting with revenue agents. Revenue agent is what the IRS calls their auditors. Revenue officers, or what, as we mentioned before, is what they call their collection people. So the revenue agent comes to your place of business. These are usually tax compliance officers or tax compliance specialists that conduct these office audits. And they're for more basic returns when they're only looking at one or two things. Then we have the field audit. Field audit is when they send a revenue agent out to your business to conduct the audit. And they sit there for days and days and weeks, but not all together. They'll be there today, they'll come back 3-4 weeks later, they'll come back again 3-4 weeks. Sometimes it takes 6 months to a year to get an audit done. It should be done in 2 or 3 days because they run out of time during the day. and they're not there for 8 hours. They're only there for about 4 to 5 hours during the day. And they ask for things, then they give you time to get it, and they're handling a lot of cases. They may be handling 25 or 30 audits at once. So that's why they can't come back the next day, because their schedules are tight. So to look at, well, let's see, today is September 15th, let's say, and my next available day to come back is October the 14th. How's that? Well, I'm on vacation that week. Okay, well, my next available day after that is October 28th. How's that? Okay, we can do that. That kind of thing. We have them come to our office, not yours. We don't want them there all day at your office. It's too easy for them to hear things that they shouldn't hear things we don't want them to hear. We can control the audit better in our office. And if we are doing the audit in your office, you're paying me to be there all day. If you're doing the audit in my office, I usually spend the first day an hour or two getting them started, answering their questions, getting them familiar with the information that we've given them. They do their work, and if they need me, they come see me. And I always tell them, if my door is shut, please wait until it's open. That means I'm with somebody or I'm on a call that I don't want anybody interrupting me. So if my door's open, nobody's in there with me, I'm not on the phone, you're welcome to come in. So we don't have as much time involved with them. You know, there may be a half an hour at the end of the day. When they come back the second time, maybe it's a half an hour to go through the information they asked for that we provided them. And again, a half an hour at the end of the day. And that takes care of them. Now, if we can't give them documentation, they will not allow the deduction. They're going to want to see your bank statements. They're going to give us a list of expenses they want documented. And they want to see the original invoices. They don't want to see copies. I've had all kinds of problems with audits where clients didn't give me anything. Oh, it's on my credit card. It's on my bank statement. I need the invoice. I'm not taking the time to look for that. Well, if you don't take the time to look for that, I can guarantee you they are going to deny that deduction. And when they do, then the client always makes time to find those invoices, those canceled checks, those credit card receipts. So, you know, the best way to help you in an audit is always keep good records. Don't throw a receipt away. I guess you can scan the receipts and things like that. I have not had an audit that has been with a client that is totally paperless, but hey, that's the world that we're going to, is paperless. So I'm sure if everything was scanned and we showed them that, and, you know, then printed a copy of it for them, that would be fine. They don't want a scan. They don't want to just look at the scan. They need hard copies for their files because they have a manager that has to be looked at it. So you've been listening to the Tax Problem Solver. Again, the number to call anytime you want to call is 877-257-1040. Email address is ckm@taxproblemsolve.com. Thanks.